Okay, so our session is starting. Let's share the screen. There we are. Recording is enabled and session has now officially begun. Now let's do this. We've got a really powerful session for you today. Today we're going to be going over really important things, and the agenda for the London Open is pretty simple. We're going to be going over how to develop a winning mindset. Now we're going to be going over 5 basic principles here, which we learn, or I learned, from literally the best educator, who is my, well, mentor in a sense. He doesn't live anymore, but through his books and his writings and his video clips, he has guided me to learn a lot in the financial markets. And his name is Mark Douglas, and he's written 2 excellent books, The Disciplined Trader and Trading in the Zone. So we're going to do that. And we're going to go over that to begin with. We're not going to rush with trading, but just give me a sec. Right, so when we're done with this, we're going to be going over the market movers ahead. I'm going to warn you, and if you are a part of my community, you will already know that the day is light in terms of data, but we do have something big happening with the UK, and we will surely focus on the GBP and try and make some quick, big pips. Finally, as always, we're going to focus on our watch list and our active trades, which is the DAX sell and AUDUSD buy. Now let's get this going. So my name is Denis Popivoda. I'm representing Tips Matter today in this video and in this live session, and I hope you enjoy it and you learn something. Now, developing a winning mindset. Now I'm going to go over these 5 basic fundamental truths, and they are: 1, anything can happen. 2, you do not need to know what is going to happen next in order to make money. Excuse me, I'm coming off a flu. So you don't need to know what's going to happen next to actually make money in the markets. Point number 3, and probably the most interesting one, is that there is a random distribution between wins and losses for any given set of variables that define an edge. 4, an edge is nothing more than an indication of a higher probability, emphasis here on the probability, of one thing happening over another. Finally, 5th, every moment in the market is unique. Now, I've been speaking about this for a long time to my community members, that every single trade is unique, and when we come to that point, I'm going to go over it. But now let's break these things down here, these little points, and, well, go through them one by one and kind of, go in depth. Now, anything can happen. Now, this truth is relatively pretty simple to understand and grasp. The market is literally nothing more than millions of people expressing their thoughts and opinions about an asset's price. And they put their money where their mouth is, or thoughts. Now, some people think that the asset's price will increase, and therefore they buy, and vice versa if they think it's going to sell. It is impossible to know what this huge collection of different beliefs will actually do next. But because the market has a memory, which is called technical analysis, we can increase the probabilities of one thing happening over the other and kind of guess what, well, the big players and the small players and this whole bunch of millions upon millions of people are thinking and trading and betting. Now, theoretically, anything can happen next. Every single person of these millions of people can actually influence the price. So in theory, putting this in theory, almost any price increase or decrease is possible. So let me explain this to you. Although anything can happen, it is important to understand that the likelihood of certain things happening, is kind of different. The probability that an asset's price will actually rise by hundreds of percent is slim, but it's there. It's not zero. Going back to 2012, Swiss franc, we had 1,000+ pip drop in a matter of seconds. Nobody expected it, hence the reason it's called the Black Swan event. But the idea was there. So the chance is there. It's always there. That a market crash can happen any second. It's there. But the chances of it are very slim, but they're not zero. Number 2. You do not need to know what is going to happen next in order to make money. This is a really interesting one. Now, the second fundamental truth goes hand in hand with actually the first one, and they're all kind of interconnected. You'll understand that as I go on. You don't only need to know what is going to happen next. You can't know what is actually going to happen next. You literally can't. You can't guess it. If you think of the markets as millions of different people, companies, banks, etc., expressing their beliefs, it is absurd to think that you can actually pinpoint what is going to happen next. Hence, I call forth the Elliott wave gurus who say it's going to go up, down, up, down, up, down, up, down, up, down, up, down, and it's going to eventually end up there in 10 years or 5 months. You guys are insane. Personal belief. Now, if you know what is going to happen next, you would have to be familiar with the beliefs of every single person or entity interacting with the market. It is pretty safe to say that that is absolutely fucking impossible. However, this does not mean that you cannot make money in the markets. If you have a trading system with a true edge, hello, I've got one, it does not matter what is going to happen next. The outcome of your trade or of your next trade is irrelevant because you're using structured position sizing, you've got definite exits, but your edge is helping you. Now, the best way I can explain to you guys what an edge is to use the casino business model to explain this. Casinos are a business that have a true edge. The odds are extremely, extremely in their favor. For instance, if somebody plays the roulette table, the casino knows that the odds are literally in their favor, but they do not know what is going to happen next on the roulette, on the spin, nor do they actually give a fuck or give a damn or care. They don't mind losing money on the next game because they know that the odds are in their favor, and thus they will make money in the long term. The same goes for trading with an actual complete trading system that actually has a real edge. You do not need to know what is going to happen next as long as the odds are in your favor, my friends. 3, there is a random distribution between wins and losses. Now, this is my favorite one because it actually explains very important principles of what's going on. This is once again related to the previous fundamental truth. As I said, they build on each other. Just because the odds of something happening are in your favor does not mean that that thing will actually occur. For example, the odds are in my favor that AUDUSD is going to close above and continue going up in this new trading range that I explained and will explain soon. And same for the DAX, but that doesn't mean it's going to happen. So let's take another look at the casino example. A casino knows that the odds of making money on a single roulette game are in their favor. However, it is very, very possible that they won't make any money on a single game of roulette because there is a random distribution between wins and losses. Casinos don't win 100% of the time, and they're totally fine with that. That's because they will win in the long run. So if you want to be a trader and you want to make money, you need to understand that you're not going to be a winner 100%. Not every trade is going to be a winner, so you cannot bet for home runs every single fucking time. You cannot do that. You need to understand that there is a time when you can break the rules and shoot for the bigger gains, but generally, you're not going to be doing that every time because this game is all about consistency. Now, here's a great question which explains how this works, and I found it in the book, The Disciplined Trader, and actually all these points come from there. Now, if you really believed in random distributions between wins and losses, could you really ever feel betrayed by the market when you lose? If you flip a coin and guessed right, you wouldn't necessarily expect to be right on the next flip simply because you were right on the last one, right? Nor would you expect to be wrong on the next flip if you were wrong on the last one. So this is a really important takeaway that you need to take home with you right now. Implant it in your mind and understand that there is a random distribution between wins and losses. This does not mean that you shouldn't trade. This means that you need a complete system. I've got one, and I'm teaching people how to use it every day, 2 times a day, throughout my courses and my live sessions and even my community. So yeah, anyway. Moving on to number 4 and 5, these are going to be quick. An edge is literally nothing more than an indication of a higher probability of one thing happening over the other. This should be relatively self-explanatory by now to you. Casinos have an edge, which means that the odds of winning are on their side, but the edge does not mean that they will win all the time. 5, every moment in the market is unique. If this wouldn't be the case, it would mean that every single person and entity that actually interacts with the markets during a previous moment have to do the same exact thing again. So if they were selling before, they'll have to sell again and again, and so forth. So you guys need to understand that every single trade is absolutely unique. You'll never trade the same trade. Just like if you stand right now by a river and touch the water of that river, you will never be able to touch the same exact drop of water ever again, because the river keeps flowing, keeps moving, changing, adapting, and so does the market. So I hope this helps. That was developing a winning mindset, and we're about to move to the next point. Now, market movers ahead. Data-wise, the day is literally dead, but there is a lot happening this week which could be driving price. So let me explain this to you. The Fed is expected to cut rates, which could weaken the dollar a little bit until the Fed decision, and then things might change. We don't care what's going to happen then. What we care about is what drop of water are we touching today to that river of money in the financial markets. So that's why I think the dollar is going to be a bit weak. It's showing me good indications that it could be happening. But all in all, pretty dead day. But the main mover, as I said in the beginning of the session, would be yet another elections in the UK, which could move the GBP, the Euro, the FTSE, and the DAX. Finally, watch list and trades taken. On the watch list, I'm only going to be focusing on GBP for now, and I'll slowly build up my watch list. And if you're a part of my community, you'll pretty much understand what's going on and what I'm trading and what I'm doing. Now, on the trades executed, it's AUDUSD buy and DAX sell. Let's go together over this right now. So here's the DAX. There is a beautiful contraction, and we'll start with that one straight away because that is the trade I've taken. Nice little rejection here, which lines up with this key Dow chain channel level. Now let me show you this level here. I'll zoom out. There it is. There's the bad boy right there. Lots of movement here. We do have a possible support here, but I really don't care. There is a beautiful contraction here indicating great price action so far, but that can change in a second. So what we have is rejection of price action here. You see this wick? Beautiful little wick. Closing right below, ironically, guys, right below there. You see that? And there was the rejection of the Dow chain channel. We have a straight line, and there's another rejection. So what I'm betting on here is that there is going to be a breakout. And what I'm betting on is that price action is going to come right back down to about the 50%, which is right there, maybe 61, but I'm targeting 50 because of this key interaction level right there. And that's basically the baseline of the contraction. Adds up pretty well. It looks good. I'll hold on to it for a while. We'll see how it works out. This looks more like a day trade. And then we've got the swing trade here and the breakout of EMA, but 3 hours and 45 minutes to go. Lots of time. No rush here. But check this out. Very important level. Now, I explained that in the video here that I released. It explains exactly what's going on. This is a key interaction level of basically this range. And we seem to be popping into this new range here. Price action has made plenty of wicks over here. Check this out. Rejection, rejection, rejection. And then here, clear, what is it called? Engulfing of the sellers. So it looks good. There is a breakout. I'm riding this. It looks great. I'll hold on. And this is a swing trade. But it's only 60 pips. Could be reached in a day. But I'm putting here about, between 24 and 48 hours. We should already be somewhere up, or at least close to the top of the range, which would be this level there. So yeah, somewhere there. You see, I'm not really targeting the top side. I'm okay with it. Yeah, DAX looking good. AUDUSD looking good. What I'm going to do for you guys now is go over the GBP pairs, excuse me, for the news today and see if there is anything. So GBP USD, I don't know, it's moving upwards because of the, dollar weakness. There is a little contraction here that we traded. We made a bit of money. We went out of it. There's the contraction. So there it is. Let me just show you. And there is a breakout of it. See, there's a beautiful breakout. Now, we do have this trend line supporting the downside move. We're making lower lows and lower highs. See that? Lower lows and lower highs are being created. So we also have a beautiful rejection candle here at the EMA. You guys see that, right? There is a rejection. Lots of little wicks here to the upside. And then we have this, support level, which adds up with this level here. You see resistance there, support here, breakout, resistance, resistance, resistance. If anything, what I'd be doing here, gents and ladies, is shoot for one more try of the 50%. The way I would get the 50% is bottom, top, there's the 50%. And that's going to be a trade alert we are going to be taking. I like that it's testing the EMA and it's finding rejection. So I'm going to pop into this here now, right now actually, and try and make it work. But it's 228 pips away. This would be an intra-week trade. So because of the Brexit stuff, you see the straight line here of the middle of the DC? Well, I'd add on a little bit here, giving me a 2.6 risk-reward ratio. That's what I would do. And because I'm a reactive trader, I basically start, checking things out. Now, this is more of a fundamental trade than anything else, or maybe even a sentimental one. So we'll see how that works out, but I'm going to be entering this pretty soon. Now, I've given you a lot in basically 17 minutes. Think about that. Think about what's going on. And I'm going to end this session. We've got free trades right now running, and I left you with excellent, specific information about how you can become, well, improve your mental side of trading. Because remember, trading is literally a 90 mental side, 10% trading side. That's all I've got for you. Thank you for attending this session. And and I'll see you in the next one. Bye for now.